Last year, Fundamental Asset Management put together a bespoke fund of AIM-listed stocks for IG as a list to follow. These are all stocks that are free from inheritance tax. Fund manager Chris Boxall joins us now with some more. Let's just quickly recap as to just precisely what it is we're talking about here in terms of those stocks and qualifying for IHT purposes.
These are so-called qualifying AIM shares. So if held for 2 years, conceivably they will fall outside of your estate after 2 years. So they qualify for the purpose of business property relief. We've put together this list. It's not all our stocks, but it's a little portfolio that we've been running with IG now for a year and a bit.
Yeah, just quickly talk us through the process that you follow as well, because you put these bespoke funds together, don't you, with a specific idea of helping people to
absolutely, yeah. They're not actually, to clarify, they're not actually funds. So every client has a segregated portfolio, and every portfolio may be a little different, subject to when they were taken on. But each client's portfolio is built from a list of our chosen AIM stocks. Obviously, the first thing we have to do is determine if they qualify for inheritance tax planning purposes. But thereafter, it's just like any normal investment process. We're looking to invest in good companies over the long term. So there aren't many changes. We've been fairly constant and consistent with this portfolio and stick with those good ideas as far as possible. Let's
bring up the portfolio list that you've got and just quickly talk about 2017 as it has been for the year. Has it been a good year for?
Yeah, it's been a great year. I mean, we were talking, if you hadn't made money in 2017, you really shouldn't be in the business, in our opinion. And it has been a very, very good year, and we've had some nice little performance from a number of our companies. Typically, there are a few underperformers. People ask, well, why don't you sell those? Well, if this long-term story remains for us, we generally like to stick with things, and hopefully it'll all come good in the end.
Pick out your stock you want to talk about of this list. I mean, there are some there that have seen some really good gains this year.
Yeah, I mean, the first one I thought would be worth mentioning after some very good interim results in the quarter was Fulcrum Utility Services. In simple terms, Fulcrum is an installer of gas, well, at its core primarily, a sort of gas pipelines. So it's an unregulated installer of gas pipelines, and it's expanding away from that into electricity pipelines as well, but more importantly for us, asset ownership. So it installs pipelines, large and small, for small housing developments, 1, 2, 3, up to multiples, and also for much larger developments like, for example, distilleries. It's put in a lot of new pipeline infrastructure for distilleries. So it's a designer and project manager. It outsources a lot of the heavy work, the heavy lifting to others to do it. It's a really nice little business. It came on the market. Management wasn't that great, but new management's really revitalised it, brought a lot of things in-house. It had some great interim results. Earnings were up 20%. Its margins are very, very good. So operating margins are circa 20%. Very high returns on equity. Some of its customers pay it up to 6 months in advance.
Yeah. How much of the future has been built into the share price there at these levels?
We think there's a lot more to go, because it's got some really interesting things. First of all, it's just received a license for electricity as well as gas. It's also, as I mentioned, an asset owner. So it's taking ownership of some of the pipelines, which will generate long-term reliable income for it. Albeit the margins may not be as high, but that means it's really in a very nice position. Another really exciting bit that's come along recently is it's getting involved in the potential for electric vehicle charging stations. I mean, that could be absolutely huge. So this business has demonstrated it manages the process of installing pipelines, and it owns meters as well, very, very well. And it should be really well placed to grow in the electric vehicle space as well.
Okay, let's take a look at your second stock, and this is Cake or Patisserie Holdings. And now this wasn't in at the beginning of the year, was it? I think this is a...
It was maybe early on in the year. Yeah. we replaced it because we had a couple of takeovers. Yeah. So we had to find some new stocks. So we bought into Cake. It's a holding we've got on our main AIM portfolio. It's not performed as well as others given the timing here. But we like it a lot, and again, recent results are really good. Its core business, its core offering is Patisserie Valerie, which has got circa 150 stores, shops, cafes, cake shops around the country. Very strong presence in the London area. We were a little concerned a few months ago that pressures on wage costs, pressures full stop, consumer pressures, eating out pressures could be impacting Cake, but it's demonstrated an uncanny ability to to really address things very, very quickly and grow. It's an ideal, a self-funded rollout like this is ideal. No debt, fantastic cash generation. It just has to have the right availabilities of sites and pick those sites. That's the key thing. Will it, the question is, will it run out of attractive sites outside London? Is it a southeast only play? And its other brands haven't done nearly as well. It's been all about patisserie Valerie.
This is a bit old tech, isn't it? It's bricks and mortar, and it's retail and so forth.
Key question: do people stop having a coffee and a little cake?
Exactly.
We know if they're worried about money. Well, okay, there may come a point, but we think there may be some while to go, and growing internationally as well.
Let's move on to some new tech. MXL Media is on your list of stocks you want to talk about today. This is up a tremendous amount, I think, this year to date.
Yeah, it's been a great performance. Timing's everything on the purchase, and we in this portfolio it's done very, very nicely. We bought it. It was very, very modestly priced. Some people distrusted the space it's in, which is online marketing. It's essentially, it owns at its core, it owns 2,000 plus internet sites, the primary purpose of which is to direct traffic to its customers. The majority of its customers have been online gambling sites, online spread betting, CFD providers as well. And it's done that very, very well. But it's using that cash flow to expand into other areas as well, and money saving, also expanding internationally. And we caught it at a very nice time. It looked really modest. The yield was over 4% and a bit, I think, when we first featured it here. And as I say, it was a nice bit of timing, and I think it could go a lot further. A lot of cash, reinvesting that cash into areas, into growth areas. So a very exciting time for it.
Let's move on to another stock we've covered before, Character Group. Now, this is a company that people may not necessarily know the name of, but they certainly know the stock of or stable of assets that it's got, because they're very well-known names.
Absolutely, it's the UK's largest toy company, and that may not mean that much. It's a circa 100 million market cap, and the giants are Hasbro, Mattel, and Lego, whatever. So it's still very, very small. But it owns that its core toy license is for Peppa Pig, which has been a fantastic brand for it, and it's developed toys around that Peppa Pig license. It's also got licenses for Stretch Armstrong, which goes back many years. And Stretch Arm, with the new Incredibles film coming out, could be a great adaptation for obviously the Stretch concept around Mrs. Incredibles. That bodes well. It's also got the license for Teletubbies, and just picked up the master license, which will kick off in 2018 for Pokemon.
Right.
Which is good, but it's had a terrible year. Its FD went walkabout. The market was tough. Then it had the Chapter 11 and the administration of Toys R Us. I mean, it's been pretty awful. But it does have. I've never seen such a positive outlook statement from a company, given the year it's had, because it has a very strong, as you referred to, stable of products and brands in there, and it gives out a lovely dividend. It's buying back shares. If you look at it from a pure financial perspective, it ticks all the boxes: high return on equity, high margin. It's very, very nice, great cash flow, some hidden tangible asset backing as well. It's got some surplus properties, but I'm very hopeful that 2018 will be a lot better for it.
Yeah, its shares are slid, I think, 13% this year, but of course it's pushed the dividend yield up.
Absolutely, absolutely. Yeah.
So if you hold the shares long,
so
then
you're being paid to be patient as a shareholder.
Yeah. Let's talk about another stock that is in the news, I think, recently. Atlantis Resources, another one you want to talk about.
Yeah, Atlantis Resources was at one point our star performer. Now it's been our material underperformer in the portfolio. And it's not at all our typical aim for inheritance tax planning stock. It's our speculative pick here. At its heart, it's a tidal energy pioneer. It's got this huge tidal energy site up off the coast of Scotland, Maygen. Which is delivered as hoped. However, it was very much all about tidal turbine technology, and it's delivered at the operating level. Recently, there was a massive announcement. There's been an announcement regarding a purchase of a very large power station in South Wales, just near Newport, which is going to be converted into an end-of-waste fuel power station, and that is being essentially reversed into Atlantis. So the owners of the power station site, SMEC, are going to be taking a material stake, a 49% stake in Atlantis, and also be potentially injecting other renewables assets. They're involved in the Swansea Bay tidal lagoon project as well. And it could be very, very exciting for Atlantis. And the suggestion is the price it's going to be reversed to Atlantis is massively higher, really. What it is higher in itself and greater than the market cap of Atlantis alone.
Right.
There's going to be a 20-year power purchase agreement. So there's a lot of excitement around this and the potential for this enlarged group.
Of the list, just talking generally again about this portfolio put together, this is the only one that has a no dividend or a flat dividend.
Yeah.
How important is dividend to you, and how important do you regard dividends for your portfolios you put together for clients?
It is important, and client perception is for it to be important, and the dividend does help to pay the management fees, but we don't feel people should be wedded to the dividend. If a growth company that is generating cash, it shouldn't necessarily be spewing out a huge dividend if it feels there are greater opportunities to invest in the business. And we're investing in many companies that have chosen to maintain a lower dividend and to invest in the business, and we like that. So it is a balance, but there is this perception about a dividend that some clients want, and we don't think people should be obsessed with it in this kind of space. These companies are growing very fast, use their cash to greater effect.
Yeah. 2018, how do you feel sitting here at the back end of 2017 after what has been a good year, as you said?
Yeah.
So how do you feel about 2018?
It's been 2017 was a pretty good year, and we're in the lower risk area of AIM, the less, the less jazzier side of the market. So not super high valuations. We think a lot of AIM looks a bit frothy. Some of the bigger things look very, very pricey, and it won't take much. Minor disappointment will see materials sell off. That's the risk. There is still value out there. I think fund managers are going to have to work a lot harder, do a lot more work, a lot more thinking than they did this year to make decent returns.
Okay, well look, we'll catch up with you again next year anyway, but thanks indeed, Chris, for joining us. Chris Boxall from Fundamental Asset Management with his portfolio of stocks he's put together for us here at IG. You can join us again in the new year for more from Chris with an update as things move on in 2018. Subscribe to IG for educational content, company insight, financial analysis and expert commentary. Or visit our website for daily market updates, trading ideas and strategies.